All right, let's get a sense of what's going on, particularly with currencies and elsewhere. Peter McGuire joining us from XM. Peter, a very good Monday morning to you. What are you watching on the currency front at the moment? Because we did see some weakness in bond yields and US dollar, with signs perhaps that inflation has peaked in the States.
Well, good morning, Andrew. Yes, I'm watching everything. I think that summarises the whole framework as far as currencies because of the volatility that we've seen in the last matter of weeks. So that US dollar sell-off, Fed Collins certainly paints a different picture, saying that inflation isn't under control and that's going to cause more concern moving forward on how aggressive the Fed's going to be. So I'm looking forward to seeing what happens this week with Fed talk, and we'll get the latest FOMC minutes on Wednesday. There's a fair bit of news coming around the corner for currencies, I think.
All right. So locally, the Aussie dollar, where you're seeing that at the moment when you factor in what's going on with the US dollar and also what's going on in China at the moment. How do you see the Aussie dollar performing?
Well, the dollar's been extraordinary as far as a trade, Andrew. The Aussie over the last, say, 2 weeks has been very dynamic and traders have had a very joyful time trading the Aussie. So it's back up 66, 70. I think there's got further horsepower ahead of it, considering the talk coming out of China over this next matter of weeks leading up to Christmas. I wouldn't be surprised to take a 68 handle out. I can't be more bullish than that. So that's the short run. As far as US dollar, I think that will probably come under a little bit further pressure to the downside. It's sitting at that 107 handle for US dollar index. So the volatility across the Aussie has been very dynamic and, a great trade.
And Pete, the Kiwi dollar in focus this week with the Reserve Bank of New Zealand poised to lift rates again on Wednesday.
Yeah, exactly, Andrew. It's running at 61.60 at the moment. So there's, as far as the New Zealand dollar, we might see that back up at 62.5. So there's a little bit of strength in early morning trade this morning across the ditch. Let's see where it runs in the next couple of days. I'm not suggesting it's been baked in, that new next rate move. So there could be a little bit further upside for the old New Zealand dollar.
Yeah, just taking a look at that chart there as far as what's going on with inflation in New Zealand. Talk us through that, Pete.
Well, you can see that, Andrew, as far as the blue line, RBNZ inflation expectation. So there it is from in 2 years. So it seems to be quite parabolic and it continues to uplift. So, and then you've got the CPI in the yellow, the inflation rate sitting above that. So yeah, I think that where New Zealand plays, it could be looking at hopefully not an 8 handle, but the chart seems to demonstrate that you may not have inflation under control there, and so further rate hikes for the Kiwis.
All right, and what are we seeing just as far as jobs in New Zealand are concerned? That strength we're seeing in labour markets in many developed nations at the moment, how's that panning out in New Zealand?
Well, it's panning out quite well, and it's been fairly strong. And you're talking about the 2 factors there: wage rises, so dollars in the purse and the wallet, so the spending power, and then the other side, of course, is the unemployment rate. And where you're looking, that chart demonstrates it all for the viewers. In blue is the unemployment rate, and yellow is the labour force participation rate. So, when you study those numbers, Andrew, and you appreciate the movement and what we've seen over the last, decade, it really tells a very, very interesting story. So it's one to look at if you're looking at investing in Kiwi land or naturally trading their dollar.
All right, Pete, let's move to commodities, what you're watching there at the moment, particularly in the energy complex at the moment. Your European natural gas prices, they jumped significantly last week. Oil, though, has come off, and once again, a lot of that is to do with the China story.
Absolutely, Andrew. I mean, we've got WTI pressing on $80. So it's $80.08 at the moment. So we're going to see a 70 handle in there sometime in the next matter of hours, and I won't be surprised. So weakness there. It's down the best part of 2%. And we've got a Brent market running at 87.60. I take on board what you said as far as European gas prices. And so they've both been bid down, those energy prices, significantly. And I think it's going to be a dynamic week for oil traders over the next 3 to 4 sessions. It's hard to pick a floor, but I'm sure it'll be whipsawing, Andrew, and that's what everyone wants.
Yeah, absolutely. If you're a trader. Hey, Pete, gold, how are you seeing that at the moment? Of course, it has done very well over the course of the past month or so as we saw those bond yields and the US dollar come off as perhaps interpretation that inflation is easing, certainly in the States. So what are you watching for in gold at the moment?
Well, Andrew, it's running at 1769 in Asia trade this morning, so it's been bid up strongly, as we know. We've discussed that over the last couple of weeks together. US dollar off, gold up. Gold's been up tremendously from 16.15, so it's up the best part of $160. So is that momentum going to continue? You might see it a little bit exhausted to the upside. We've just got to see what happens with that US dollar. But this week could be, again, a dynamic week for precious metal traders, and certainly keep an eye on silver, because that's been outstanding over the last matter of weeks also. And I think there's plenty of fun and games in the silver market in the short term, because it's sitting at about $21.20 an ounce.
So Pete, with gold, what's the key level you're looking for? What's the likely resistance level, and if it actually can break above that?
Well, Andrew, I think, we've just had such a dynamic move in the last 2 weeks that you'd have to say 1770, 1775. When you're looking at the technicals, I've also got to take on board what's happening as far as seasonality demand, as far as Indian wedding season and that time of the year for Christmas and so on, from a jewellery consumption. And then the other side, of course, is, the fundamentals with what's happening with rates, inflation story and global uncertainty. So many countries are buying big swathes of gold. And I think that demand will continue, certainly across not only central banks, but governments, but naturally the other side as far as retail consumers.